Like,
Well, yeah, well, because the whole thing is that when you have a whole life policy, you have a fixed. I like it because it's a contract.
yeah.
They can't, a whole life contract. They can't increase the mortality. There has to be a guaranteed rate of return, and so there has to be guaranteed return. There's professional money management can go on all that stuff. But when you go to an equity index product, okay, and I like equity index annuities a lot, but on the life side, now you're letting the companies control potentially mortality. We don't know if the market's going to go like it was in the go-go years, where it essentially never came back for a long time.
Hey, what's going on, cash flow hackers? It's Chris with Life 180, and I am here with author of The Pirates of Manhattan, Barry Dyke, and excited. Barry came on the channel, I want to say it was about a year ago now, right? Yeah, something like that. And so he is one of the most fun people to talk about, because when it comes to just knowing this industry, I always call him like the godfather of research for this industry, because this guy is absolutely brilliant when it comes to understanding all the ins and outs of this industry, when it comes to really knowing what's going on with the banks, with the institutions, who's utilizing insurance products. And I love helping to get him in front of people, because I'm just super passionate about this. And I feel like, Barry, like, I just got to say this for you, is like, I feel like you've done so much work that has helped so many people, like not just people utilizing it, but like life insurance agents. Like, I feel like every life insurance agent that does this well, and in fact, I'll say, I think it's pretty much impossible as a life insurance agent to do this job the right way of selling and representing what life insurance is and how it can be used without reading your books.
Well, thank you, Chris. You're much too kind. You're much too kind.
Well,
I'm just a white-haired guy from New Hampshire with a computer. That's all I am. At the end of the day, it's just you're more too kind. But thank you so much.
yeah, man. So I'd love to get into this, and because I know time is of the essence, and I think I'd love to talk first and foremost out of the gate here about what do you see going on from a macro level in the economy right now with life insurance companies, because I know a lot of people are really concerned about, an economic recession, even potentially a depression, concerned about life insurance companies, concerned about the valuation of the dollar. And I'd just be curious to kind of get your take on that, as from like a macro level right out of the gate.
Well, it's not good. I mean, I'm not corny, but I tell people I read the Bible every morning, because when you understand what's going on, it's it's not good, because with Ukraine, with energy, but I think I paid, I have some high performance cars. I think I paid close to $5 the other day for gasoline, so for high test. And so we get a lot of things. We do have stagflation. We have stagnating wages. We have inflation, which is out of control. I mean, I live in a beautiful area in Seacoast, New Hampshire, which is a beautiful area. Please come up here if you're ever around, Chris. But real estate is out of control. Food's out of control, and thank God, my kids are grown and stuff. But so we have a lot of the. And then we have the hangover from all this massive money printing. So I think now more than ever, Chris, I think people have to get back to the fundamentals, the basics. Understanding that debt is an enemy. I think really we need to strengthen our own personal balance sheets more so now than ever. Because the thing, let's face it, if we get another 2007, 2008, and actually when you look at the actual statistics, Chris, the student loan debt, credit card debt, every type of debt is much, much higher than it was prior to 2007. And actually, proportionally, it's actually worse than it was prior to 1929. So when you look at all these things, it never ends well, okay? Hopefully not. I don't know. I'm not God. I don't know. But I think really now more than ever, you really have to really kind of put your seatbelts on and look at. I think was the Nasdaq's down like 13, 14% year to date, and the Dow's down 9%. So I've been talking about it, and I'm not. I kind of not gritting, but a lot of the stuff which I've felt's been coming is now coming along. And the more I know, the more I don't know, Chris. Okay, but I do know is that if there's a bailout, the taxpayers will be left holding the bag, and the banks will get bailed out again. And so in the asset managers, so a lot of the stuff is we don't know what's going to happen next day, next week, and the whole thing. So the whole idea we can protect the future is foolishness.
Yeah.
And if you turn on the TV, you turn on the business cable channels, it's somewhat financial pornography. So I think you really need to listen to financial, people who have level heads. I don't know if you ever look at Jeremy Grantham, from Boston's GMO,
No.
but he's a very sharp guy. But it's just, so I think really when you have this, you have all this debt and the pension mess and all this stuff. It's just, I think it's time to have level heads in the game.
Yeah, no, I agree. So I've been working on this thesis, and I'd love to get your feedback on it, because one of the things. So I just went to this event. It was called Market Disruptors Live, and there were a lot of high level economists, people that kind of play that role in the economy. A lot of Bitcoin bulls, people that think Bitcoin is the future. A lot of people with a lot of different perspectives, real estate investors, and everybody had their own kind of slant or opinion on what direction this economy is going to go. And even, do you know who Danielle DiMartino is?
I've actually interviewed. I know Danielle. I actually know Danielle. I've actually had her on my old radio show. I know her. Yeah.
Really? Okay. So she was one of the speakers. Fascinating conversations, right? And so, out of all these 16 speakers that were there this weekend, one of the things with my perspectives that I kind of came out of thinking is that they all had kind of a different perspective on the path that we take, but at the end of the day, it all comes to a crash, right? Like whether it inflates first or we go right into deflation, right? So we have people that think that the Fed's Treasury balance sheet is going to get to $100 trillion before it crashes. That's one side, which is a perspective, right? That's an extreme angle. But then again, back in 1982, when it was $400 billion, nobody could imagine it would get to 30 trillion, right? So like, I'm never going to rule anything out, right? And then we have some people like Harry Dent, who I love, who thinks that, we're not even going to have inflation going into next year, that the game is going to be up, and that we're going to have deflation, and there's going to be deflation and contraction in the economy sooner than later, because demographics run the economy, and demographics are horrible right now. And so what I came out of that conference really thinking about, knowing my perspective on life insurance, is that we need to be concerned and we need to be prepared and positioned for deflation and inflation, because we're not going to know how to time this thing, right? I mean, that's just the reality. And nobody knows what's going to happen. And that was the one kind of good part about the conference, is every speaker was just like, this is what I think. I don't know, nobody really knows like the timing or how it's all going to play out. They just all have their own kind of hypothesis. And so what I got to thinking, and I'd be curious to hear your thoughts, is if I have safe liquid capital that I want stored, I'm thinking long-term, I want to have that money with a life insurance company. And let me kind of tell you why. And I want to give you I'd love to hear your thoughts on it, is because when I think back to life insurance companies, their first and foremost job is to preserve purchasing power, right? To preserve capital. And it's a long-term perspective. Having our money in a bank, banks fail. FDIC is underinsured, right? Underfunded. Right. And so I'm just kind of going through this, and I'm thinking of you as I'm thinking these things, because I learned 80% of this from you. And so like, as I'm thinking through this and I'm going, okay, so we go back to the institution of the Federal Reserve. Where did all these bankers and crony capitalist guys have their money? They had it in life insurance companies, right? So they create these banks, they get you to put your money in the banks while they take the money and they put it in a life insurance company. And they trust these companies to do it. Based on your research, I've seen 50 plus Congress people that you've confirmed have money in life insurance companies. So there's all this going on, I'm sure, and corporations, and the list goes on. So I'm thinking to myself, if the world's elite and decision makers and federal, policymakers have their money inside of life insurance companies, I just want to, one of my mentors a long time ago said, Chris, if you want to be successful, find the people that have the life you want and emulate what they do. So if I'm gonna do that, I'm gonna try to find where they are, because no matter what happens with the dollar, the world's reserve currency status, I go back to the idea life insurance companies have been managing risk for 170 plus years. And if all things do get, let's say it gets a worst case scenario, I feel like because life insurance companies are really the bedrock of our financial economy, because of that, like they're going to know how to pivot and manage the risk and make whatever transition needs to be made. What do you think about all that?
Well, I agree with you, but also, people are going to have to be more prudent. They're going to have to work with advisors like your advisory firm,
Yep.
more so than ever, because there's a lot of problems, which I've discovered, and I don't know how I'm going to address this, but with the private equity inclusion into the life insurance space, particularly in the index annuity business. Cheryl more market intelligence. I don't know if you ever had her on your show. It should be great, but
No, I'd love to.
but Cheryl, she's found roughly about 40% of the index annuity business is now with private equity-backed life companies. So people, it's trickier than ever. In other words, is that at the end of the day, if people have money in a mutual fund or in an annuity or a fixed equity index annuity, it's got to be safer than it will be in a mutual fund, if you will, or an ETF or index fund, whatever. And I'm not against the market, please. We manage money here. I'm not against the market. I love my iPhones, my Google, and all that stuff.
Yep.
But I think people now you have to exercise due care more so than ever, and you're going to need someone with independent voice, because the fact of the matter is the media is going to do nothing they have absolutely no incentive to tell people the truth. The financial institutions have no incentive to tell the truth. The life companies, which are really good, don't know what they got. So more than ever, they kind of need people like you and I. But this is the problem, and people, and I don't know if you've ever read about the collapse of Executive Life. That was one of the largest life companies ever to collapse in world history. And a little bit before your time, they went into receivership around 1991. Okay, now the whole thing with the collapse of Executive Life, that was caused by junk bonds, which is really kind of our daily bread now, and bond funds. Now they don't call them junk bonds; they call them high yield. Okay, so it's all the linguistics play. It's all they manipulate all the language. So if you look at the collapse of Executive Life, and people don't, it was all caused by junk bonds. See, prior to 1983, life companies couldn't even couldn't invest in anything below investment grade. In 1983, they were allowed to do so, only 5%. Then it was Michael Milken who convinced everyone to invest into Executive Life, and that Executive Life collapsed due to the junk bonds. Then Columbia. Then we had the S&L crisis, which was primarily caused by junk bonds. So now the person behind that, the key portfolio manager, along with Michael Milken, was Leon Black, and so who's now with ex-CEO of Apollo Gold Management, who's now a major player in the private equity Athene space for index annuities, and they're one of the biggest players. So my point is that it collapsed. The Executive Life collapsed in 1991. They didn't even find credit liens. It was a totally illegal transaction at the time. Executive Life, the bond portfolio was sold to credit liens, totally illegal, a total violation of Glass-Steagall Act, totally illegal from a California law perspective, because an insurer couldn't be owned by a California-based insurer could not be owned by a foreign entity. They didn't find anything about it until 1998, and that was a whistleblower. Okay, this is all true. Okay, anyone believe me? Google it. Actually, the Congress didn't even investigate it to 2002.
What?
I couldn't make this stuff up, Chris.
Oh my gosh.
They finally fined Credit Lyonnais $770 million in 2003. People Google it. People don't believe me. FBI, Credit Lyonnais, collapse of Executive Life. Credit Lyonnais made like $3.5 billion on this trade. I think Leon Black and Apollo, that was the origins of Apollo, made about $1 billion. Nothing ever happened to them. they stuck the state guarantee funds for 3.87 billion. And the thing is, which you and I pay for in our insurance premiums. So the whole thing is, people say, hey, look, this has happened before. Mark Twain said, we don't know about history, but it sure rhymes. And so, and if you study institutions throughout history, life companies are the best stewards of capital. There's legal restrictions for it, and then that makes them, the reason why they're strong is there's actually contractual reasons why they're very strong. So my concern is that if this happens again, who's going to be bailing out the people? And I think if people really knew the nature of private equity and so forth, they wouldn't. They'd run. But in any event, so there's a lot of moral hazards out there. There's a lot more landmines than there was even prior to 2007 and 2008.
Yep. So let's talk about this, because one of the things that's a big trigger for me, emotionally, we'll call it, right? And I'm not one to get triggered by much, but I get pretty fired up when I go online and I see people selling Index Universal Life as something that I don't think it is, right? Like, Index Universal Life has its place. I've done some videos on this lately. It's not that it's a bad product, but it is the most misrepresented product in the financial industry, I believe, right? And so that said, when people are positioning or pitching or selling IUL with all the benefits that whole life has, but, and then upside on top of that, if it sounds too good to be true, folks, it probably is, by the way. And so you just mentioned something, though, about private equity in the IUL space. Can you expound upon that? Because I think that's a really important component to understand. And do you know, you maybe do or don't, I don't know this, but do you know what companies are most involved with private equity in, like?
Well, there's some pretty big ones. And the thing is that in private equity, essentially debt-based finance, and we could go for an hour or two today, but I don't have the time about it. But but there's been a major, tremendous amount of bankruptcies, and now and the Department of Labor essentially blessed private equity in June of 2020. They said, okay, we can let private equity be included into their 401k plans through target date mutual funds, which is like, oh my God, what are we doing now? We're driving over the cliff again. Yep. And then the SEC ruled on it, and this is all a result of lobbying. We have the best democracy money can buy. So private equity, they kind of own the public pension plans, and so they're looking for new happy hunting grounds. And so now they're going after the retail investor who doesn't have a clue. And so to me, it's just these guys being bullies and people getting mowed over. And but I'm just a guy from New Hampshire, but so there's a lot more risk for investors out there, or savers. And that's another thing. Language, Chris. Linguistics. That's one thing. I get to know Noam Chomsky. He lives in Tucson now. Yeah, he lives in Tucson now. But he's about as left as you can go. But I like guys who tell the truth. But we have a real problem with linguistics in this country. Now, people who put money into insurance companies, whatever, should be savers. They're not investors.
Right.
Okay. So this is the problem. Everything's investors. Like everyone, retail customers, they're not investors, they're savers, okay? But putting that nomenclature on that they're investors, think they're all sophisticated, and the fact of the matter, they're not.
Yep.
And I have some pretty sophisticated clients who are pretty wealthy, okay, and they're kind of dragged into it as well, and in the sense that then people, they're not that sophisticated. No. But the narrative on the business cable, everyone investors this, investors that, the whole thing, the cable business channels make all the money on advertising. They don't make it on investing in the market. Yep. So I don't know if
that's awesome. So what I'm hearing, it reminds me of well, anytime you put risk into an asset where you're not supposed to have risk, so to speak, where the risk is supposed to be mitigated, that's a big problem. And these stock companies, or even some of the mutual companies that are getting involved with this, I don't know if they are or aren't, but I know, I guess what I'm hearing from you is it reminds me a lot of 2004 through 8, or whatever that time frame was, when the collateralized debt obligations and the derivatives, and nobody understood what they were. Nobody really even saw it. Was the inside people. People were making money hand over fist. And that was ultimately, those got interjected into financial markets where they shouldn't have been, and nobody could understand them. Nobody could track them until it was too late. Ended up causing all these problems, and kerpow, that went the market, right? Like, is there a correlation between private equity?
Yeah, no, it's actually it's worse. It's I don't know if you ever heard of the book, a landmark book, written in 1914, Other People's Money by Louis Brandeis.
I haven't, but I'm going to now.
Okay. Well, it's essentially about bankers using other people's money like it's their own and gambling. And now we've just institutionalized it with funds and index funds, which are really almost kind of Marxist at this point. So this is the whole thing: is they're taking control of other people's money, and they're being so lawyered up, Chris. If the thing blows up, it's not their problem. They have so many blocker corporations, or so many entities, or they're just in the Cayman Islands or Isle of Man, or who knows. So there's really, and so these private equity firms, they're making their money on the fees, and if they blow up, well, it's not my money. And this is, and as I say, it all goes back to Louis Brandeis in 1914. It's really by gambling with other people's money. And as stewards and as planners, I think really people work too hard, Chris. Only in America can you save 15 to 20 years in a 401k and watch a chunk of it go up in smoke within 30 days. That's what's going on since the beginning of the year.
And it goes cyclically. It seems to happen pretty consistently every 8 to 12 years or so over the past 30 years, right?
Yeah, well, look, here's a couple of points, okay? And we do things like we do payment for order flow, which is essentially front-running stocks, okay? Till 1982, it was totally illegal. Then some banker from E.F. Hutton or Merrill Lynch or whatever, they got to repeal that. So now, that was stock buybacks. But essentially, front-running is illegal, like in Canada and the UK and the whole thing. But we let companies sell order flow to hedge funds so they can make money, okay? So it's just milliseconds, but these companies, these hedge funds essentially placing bets in front of people, it's known as front running.
Yep.
And then if you look at something like other market manipulation, 50% of all the market activity, Chris, has been in stock buybacks.
Yeah.
Which was illegal till 82, okay? And so
I did not know that.
Yeah, it's 50% of all market activities in stock buybacks, which is manipulating the stocks.
I didn't realize it was illegal until 1982.
Yeah, it was.
Wow. Yeah. Okay. So talk to me, because I think this is really important. Because it's no secret, I prefer whole life. Anybody that watches this channel knows I'm a hardcore whole life proponent over IUL, simply because I believe life insurance companies, fundamentally speaking, are meant to be exactly what you just said, a savings account versus an investment account, right? And IULs are sold as investment alternatives. And listen, if you do it the right, it's not all bad, but just make sure you understand it. But when I think about what I want the life insurance company to do for me, I want it to protect and preserve the purchasing power of my capital over a long period of time. And then I have access to it if I want to take risk in real estate or crypto or any other asset that I want to do. Yeah. Even if I want to go buy Tesla shares, right? Or something of that nature, I could go do it, right? And so what I'm curious to know about, because I haven't really thought about this side of it, the private equity side interjected into the IUL space. How do you know, like if somebody is watching this and contemplating getting an index universal life policy, how do they know what companies are really deep into the private equity space to protect themselves? Because I look at that's just another layer of just, it's an abomination in my opinion, from what I'm hearing. And I think it's a massive level of risk. And anytime, I just got to throw this out there before you answer, but anytime you interject more risk into a product that's supposed to have downside protection, the risk is in the manipulation and the cap rates and the fees and all that stuff. And anytime private equity is going to be involved, they're going to make sure they're covered before anybody else is covered. You know what I mean? You're going to be left holding the bag to make sure they get paid. You're going to take the losses and they're going to get paid all the money with no risk on the table. That's how I see it. And tell me if I'm wrong.
Yeah, you're right, and it's actually people. People don't. With private people. Unfortunately, most advisors, and don't even know how leveraged buyouts in private equity business. It was just to give people a kind of a background. I'm just looking at my schedule here, but to give people a background, there's about 25, 26, a couple, maybe 2, 3 dozen leveraged buyout corporate writers in the 1980s, and then there was the classic case Barbarians of the Gate with the leveraged buyout of R.J. Nabisco, and it was a very small piece of it was a sliver of Wall Street business. That business, Chris, model, that debt-based business model, has gone from 3 or 4 dozen companies in the 1980s to over 6,000 companies worldwide now, and when you include in venture capital, so it's exploded. So all we see it, private equity touches everything now, and it's all debt-based finance, and it's always the same. Take a little bit of equity, their own equity, get other people's money, primarily from state pension plans like in Arizona or Texas, wherever the case may be, and buy the company mostly with debt, and use the company balance sheet to finance it. So we're not using any putting their money at debt. So, but that's model, it can work, don't get me, it can work, but it can also blow up. For instance, you're in Texas, Neiman Marcus, that was a leveraged buyout, they blew up, they went bankrupt. Energy Future Holdings, which is the largest utility in Texas, also known as TXU, that went bankrupt in 2014 with $44 billion in debt. Stations Casino in Las Vegas went bankrupt under Caesars Entertainment went bankrupt. Chrysler Motors, GMAC, which is now known as Allied Bank.
Oh, GMAC is Allied Bank now?
GMAC was the old. Allied Bank is the old GMAC.
I did not know that.
It was a leveraged buyout in 2006, and actually Cerberus Capital, who did this, in Citigroup, and I think HSBC, whoever it was, they actually dumped their pension obligation onto the PBGC. They went bankrupt. You and I, the taxpayers, put $17 billion into it. It's all fact, okay? And now it's going to be part of the inclusion to target date funds now for people's savings plans. And because of the legislative fiat, I think target date funds capture roughly about 80% of all new deposits now. And they're index funds, so it's not good, Chris. So I mean, so people now more than ever need people like you who help them with the planning and just doing safe stuff.
So how much of a risk, if you had to put a percentage on, like if Index Universal Life a decade ago had a certain risk ratio to it, now that private equity is getting more involved, like what extra risk does that put inside of the policy, do you think? Can you even break it down that way, or like? Well,
yeah, because the whole thing is that when you have a whole life policy, you have a fixed. I like it because it's a contract.
Yeah.
They can't, a whole life contract. They can't increase the mortality. It has to be a guaranteed rate of return, and so there has to be guaranteed return. There's professional money management, we can go on all that stuff. But when you go to an equity index product, okay. And I like equity index annuities a lot, but on the life side, now you're letting the companies control potentially mortality. We don't know if the market's going to go like it was in the go-go years, where it essentially never came back for a long time. Right. So and then if you study the statistics of actual investment rates of return, Chris, and I have a good friend of mine who've studied roughly 127 public pension plans. And investment returns, when you look over a long period of time on a whole, on the aggregate, they return to the mean. So people really very rarely meet the market. Now, there always will be outliers, okay? You'll always have the Elon Musk of the world, okay?
Totally.
Also, Elon Musk would be where he is today without all the taxpayer credits for all his Teslas. It would be $7,500. So, but I'm not saying there won't be, but when you look at, so my point is, why, if I'm a business owner, most of my clients are business owner or high net worth people. If you're a business owner, why do you want to put more risk into your life? If you're coming to your financial security. And so the thing is, which maybe we can get into a bit, and maybe we can do this another day, but that's why I'm in this new movie. I think I have the baby boomer dilemma. I don't know if you can see that.
I can. It's awesome. I haven't watched it yet, but I need to. It's been on my list. I got to get into it.
So yeah, so that's another story. But I was kind of neutered in that one thing. I was interviewed, but I'm in it for like 50 seconds. But some friends of mine, Ted Bennett, the guy who created the 401k, is actually in it, and Ted Siddell and Dave Walker and a lot of Moshe Mavilsky from Toronto, and the top economists in Canada, and Robert Merton and William Sharp, who both got the Nobel Prize in economics, about retirement income, because that's one of the greatest problems in all financial planning today is using. And so anyhow, my research, which would be, it's in guaranteed income, which I think you've read, but this will be an updated guaranteed income, which will show how major corporations are using annuities and other life products to really finance their retirement plans. And again, it's, so it's just I've been working on it a number of months. It's been hard, but it's going to be really well worth it for your people when it's done.
I love it. Well.
Because even the banks buy annuities, and this is the whole thing. It's like Merrill Lynch bought one for, Bank of America, Merrill Lynch. Okay, don't believe me. It's public information. You file the 10K, look at the 10K in 2019. They bought an annuity for $516 million dollars, and Morgan Stanley, who makes more of the money gambling with other people's money, have 0% of their money. How much do you think Morgan Stanley has of their own pension plan, Chris, in the market? Because they make most of their money gambling, okay? Buying and selling, mergers and acquisitions, IPOs, investment banking, a lot of raising. So they make 67% of them, and wealth management, okay?
Yep.
How much do you think they have their own pension plan?
Oh man,
in the market?
Question here. I would say, I would guess 30% or less. 0. They have wait. Morgan Stanley has 0% of their money in equities. So Morgan Stanley makes their money by having people come to them. They manage the money, they sell the stocks, they basically get paid with taking no risk. And so that's where they generate their revenues. They take that revenue and then they go and put it into insurance companies. Wherever, like, what do they do?
It's investment grade bonds, okay, which essentially, which insurance companies buy. So, and the whole thing is that Morgan Stanley actually was the broker of record of the 3 largest annuities ever sold in the United States. General Motors, the 29 billion one, okay. Don't believe me, folks? Google it. 2012. Verizon bought one for 8 billion, and Bristol Myers Squibb, I think it was bought out like 8 billion, 7 or 8 billion. Oh my God. But it's so this will be coming in the new book. So the whole thing is that now the whole thing is without God and without some type of honest system of weights and measures and some interest rates. Okay, even annuities are at risk. But the whole thing is that the fact of the matter is, at the end of the day, these major corporations, not just in the U.S. but also in the UK, and this is a major thank you, God, for the internet, because I started to discover it, that I started looking at through the internet, and we call them group annuities in the U.S., but they call them bulk annuities, okay? And they don't call them pensions, they call them pension schemes, but in the UK, okay, they're doing the same bloody thing. Yep. So the BBC and Louis Vuitton and Heathrow Airport, and it goes on and on and on, and a lot of these banks, UBS banks, all these banks are all buying annuities to finance their pension plans, which are backed by life companies.
So okay. With that said, it kind of goes back, and I know you're coming up on time here. So it goes back to my thesis. I'm working on this, just so you know, because I'm working on putting this whole presentation together, and I might lean on you a little bit to help me with some of the statistics and the data. But I'm going back to the concept of, do what the most successful people in the world do with your money if you want to be protected. Because I'm looking at this going, I am personally, so I know this isn't everybody's cup of tea, but I personally am a bit of a conspiracy theorist. I'm just going to put that out there, like, openly. So I'll put my head on the chopping block for all you haters that like to get after me. But I do believe that, and I am a believer that there is a higher like group of people that is in this for control, that is manipulating things to a certain extent. And I do you know who Larry Leopard is by chance?
No, I don't.
So he was a speaker at this conference, and he had this great statement. It was fix the money, fix the world, right? Like if we can fix the money, we can fix the world, right? Like, and the problem is the money, and money is the tool that controls people, and it's all about money and power. That's all it is. That's what this world is about. Like that's how this is being done. And so my perspective is I want to get as much money inside of life insurance companies as possible, because those life insurance companies, not only are they better at managing the risk, but they are also the place where the big banks, the institutional banks, the corporations, and Congress, all these people are storing a good percentage of their capital. And so I call this like they are the bedrock of the financial world, right? Because they may not have the highest amount of capital there or whatever, but it's the highest amount of unleveraged capital. And when you understand leverage, the bigger it gets, it just is a bubble, because it takes a little prick and everything goes to hell in a handbasket, right?
Yeah, and leverage, you nailed it, Chris. It's leverage, and it's always, leverage can be a good thing. I'm not against it, but it's out of control now. And the whole thing is because of the tax laws and the interest rate deduction. It's all really kind of, it's all in favor of Wall Street leverage finance, the private equity, the hedge fund types, distressed debt. So it's really, it's a club, and you and I are not in it. Okay.
Yep.
So what I'm saying for the people we love and care about, we want to preserve what they have, and if they want to retire, you want to have them to have peace of mind in retirement. And I've been doing this a long time now, where I have people with annuity portfolios, and we do other stuff as well. Don't get me wrong, but very few never have any problems. The thing is that, but it's something that people really need to know more about, and so it's a good thing, but I have to document everything, because I don't want to get sued, and so but it's in facts are our friends, but so if you dig through the 10Ks and the 10Qs and stuff like that, and the FDIC records, but also the internet has been an incredible blessing. As much as our privacy has been invaded, it's been an incredible research tool for me.
That's amazing. Well, so I know you're up on it. I'd love to have you back sooner than later to keep this conversation going, because I think this message needs to get out there to more people. But if anybody watching this is interested in learning about anything to do with where to keep your money, to understand the research behind all this, I said at the beginning, this guy is the godfather of this research in this industry. And I would go read Pirates of Manhattan, The Pirates of Manhattan 2. I think it's The Road to Serfdom, which I love that title, by the way. Thank you. It's amazing. And then Guaranteed Income is another great book if you're nearing retirement age and you're really thinking about how do you like lock in your income for the rest of your life, because it's not about how much money you have, it's about lifestyle and locking that in, right? And so
you can gamble with assets, but you don't want to gamble with your income, and so and people go to barrymajamesdyke.com, buy it up, the book's up on my website. I know some wholesalers, whatever, they buy it up, and some of my books are sold for like $100 a single copy on Amazon right now. On eBay, but if you go to barrymajamesdyke.com, you can get it, which it's cheap, and we just sell them direct, and they can also, you don't have to buy the book, just sign up for the newsletter, and we'll be happy to add them on.
Beautiful.
So I'd love to do it again, Chris, but I kind of on a time constraint today.
Yeah,
so.
Totally. I get it. So guys, make sure, if you haven't already, make sure you subscribe, hit the bell, that way you're notified. That way next time Barry's on, you are notified and made aware. And
go to if you've seen the trailer, boomermovie.com for the baby boomer. It's a good job. Doug Orchard, the documentary film, he did a really good job.
I'll check it out, and I'll put the link to that, and I'll put the link to Barry's website where you can get the books. I'll link that down in the description below. So if you haven't, go get those books, read them. It will be one of the best things that you can do for your own education. I'm a big believer nobody should put their money anywhere that they don't understand. And so do this so you understand it. And that's it. So Barry, thanks for being here, man. Always amazing talking to you.
Thanks, man. I'll talk to you again, Chris, and keep doing the good work.
All right. Thanks, brother.
Get around. Bye.